All right, so we talked about internal range liquidity, and internal range liquidity is looking for short-term lows or short-term highs inside a price leg that we're retracing back into. Okay, that's all it means, internal range. Liquidity is a short-term high or low with stops above or below it, or an imbalance in that same range of price action. And I taught you market structure shifts. Showed you exactly all that's necessary. That is all that you require. And the skill set of identifying pools of liquidity, that is going to be something you learn rather quickly just by going through old data and looking at the times of the day I gave you in this lecture. All right, your homework is you're going to go through your E-mini futures intraday charts, and you're going to be looking for stop hunts that lead to market structure shifts intraday. You're going to log your examples with your own annotations for your study journal. So what I showed with the break in the market going higher and lower above old highs or lower below an old low, that's running for stops. That's a stop hunt. Then you're looking for that signature for the market structure shift on the 3, 2, and or 1 minute charts. Okay, if you look for that between 8:30 in the morning to noon New York local time in the E-mini markets, or if you're watching the micro markets, the same logic exists. Okay, but you're going to start going back from today and go back as far as the data will allow you. The more you do it and you annotate your charts, the more experience you're going to have. And it's pseudo experience, yes, but you're teaching your brain. I use this analogy a lot with my paid mentorship students. It's like hunters, okay? To know where you're going to find a deer, if that's what you're going to go out and hunt, you need to know how to track one, okay? Or sit up in a tree stand and just wait for it to walk by. But usually they go out and they walk around in the woods and they look for tracks. Would you know what a deer track looks like? Before I was shown one, I didn't know what it was, okay? But because I'm showing you what it looks like, that's all this lesson was predominantly focusing on, is the actual view of what it looks like, the details. What you don't need is anything above and beyond what I've shown you. The only thing that you need is what I've shown you here. It's simple, it's straight to the point, and I'm only talking to that way you understand that this is all that is required. Notice there is no commitment of traders. Notice there's no breakers. Notice that? I've stripped it down to the chrome. Now, this isn't the only way you can trade, but I'm showing you something that I think personally, this is my opinion, this is so universally simplistic. All of you should be able to do this one. Okay, in my opinion, I think this is it. And that's why I more or less built it, because I think my daughter, which has zero interest in trading, I think that this is going to be easy for her to see it and understand what to look for. It doesn't have a lot of moving parts. You notice that? It's very specific times of the day, specific highs and lows you're going to look for. It's simple, but you won't appreciate how simple it is until you go back in your charts and you annotate your 15-minute time frame for your buy-side liquidity pool and your sell-side liquidity pools, and then going down into the 3-minute, 2-minute, and 1-minute chart. So for every individual day that you're logging and you're backtesting is just dressing your chart up like I'm showing you here, and then studying it. Not just do it and say, okay, I'm done. Really go into to see how price moved and how it delivered. How many pips did it move? How long did it move going higher or lower? How much drawdown did it put on your position if you would have taken one? All of those things, you want to annotate that in your chart. So that way, when you go back through your study journal, you'll have many examples to look at. And because you're looking at it and you're seeing it over and over again repetitively, when you have a period of time where or nothing feels like it's working and you feel confused, you want to go back through your study journal and look at these examples, because it will encourage you through periods of time where you just feel like it isn't clicking. Okay, it's why it's important to have a study journal, because you're going to see this stuff is happening every single day, And don't take the infancy that you have right now and the lack of experience and amplify that to, there's no way I can learn how to do this, because that's a lie. That's a facade. Don't buy into that view. Okay, it's something that you're going to have to grow into, and it's going to be quick for some and it's going to be slower for others, and there's no way I can make it easier than this. Okay, because that workload that you have to go through of backtesting and logging and acquiring examples, the more time you do that, The more examples you acquire in backtesting, I swear this is the secret, okay? Because that is the thing, that's the work that's required. A lot of people say they do it, but they don't, okay? They go back a couple days and say, oh, I don't feel like I'm getting anything from this. But that's the reason why they fail, because that's the work that's required. You know, and having 10 pages in a notebook saying, I took notes. You didn't take notes, you scribbled. You wasted your time. You knew going in you weren't going to be that headstrong about doing it. And that's what is required to learn this. Otherwise, if you don't have that mindset, this isn't going to be for you, because it's going to require work. It's going to take effort and organization and personal responsibility. If you don't have those characteristics, you need to develop them. If you don't develop them, and patience, you might as well go out there and find somebody that's good at giving you trade signals and just submit to that. And good luck with it. But this isn't it. I got another portion of the video I want to show you now. And I'm going to show you this logic actually working today in the NASDAQ E-mini contract. All right, so we're looking at TradingView's chart in the backdrop, and I have the TD Ameritrade open over top of it, scrunched down, so that way I can operate with the TradingView. And I'm going to highlight in TradingView a fair value gap after a market structure shift that's bullish. And I'm going to show you an imbalance that is in a premium. Okay, see that? Just the opposite of what I've been showing you. Change the color on this. And the idea is I'm going to see it drop down into that green area. But if you look real close, there's actually a smaller little fair value gap just below that green box. Okay, this is not supply and demand. Okay, the idea is I want to see it drop down to that green box, and I don't know if it's going to dip into the lower fair value gap. So whenever there's two fair value gaps like this is for your notes in case you missed this. The idea is I'm going to let it trade down to that lower one. I'll sacrifice that better entry. And if it trades down there and trades into it and then comes right back up into that green box, the first higher fair value gap, I'll enter when it's in there and expect that the lower one won't be retraded to. Okay. I'm going to be trading with a stop that will have essentially 3.25% risk. I'm not suggesting that's a size of risk for you. I'm just telling you that's what I have in mind when I'm taking this trade. And this is, again, just my personal belief in this. I'm not suggesting that you should believe me or subscribe to this view because I'm showing you a live account. This does not mean that every trade you take forward from this day on is going to be like this. It doesn't mean it guarantees profit. It doesn't. But my belief and my faith is that I've seen this work so many times over the last 30 years that I know that this is something that's going to work enough for me. And that's all that matters. It's a personal endeavor when you're speculating. If you don't have any faith in it, then obviously you would never put live money in it. All right, so the market's starting to drop down a little bit in here. And let's say, for instance, that it runs up into that upper rectangle first before going down to the green one. Then I would nix the trade, and that means I wouldn't take a trade, and I would move to the sidelines and probably do nothing the rest of the morning or watch and see if there's something else that sets up. All right, so now I'm inside that rectangle, but notice again, I want to see if it goes down to that lower fair value gap that's not highlighted. I'll mention it when we get into it. That right there, I'm willing to sacrifice that because that's actually the better buy. But if we go back up into the higher fair value gap and create like a tail on this particular candle, I'll see that as just running for a lower imbalance, and then it should accumulate in here. And I have my trigger on the buy button. Okay, I'm just going to go in with a buy at market. I'm not trying to do anything advanced here. Okay, and if you look at the bottom of the TD Ameritrade live account module, you'll see the NASDAQ symbol, and you'll actually see my profit and loss going as the trade is entered. And I took a trade in the E-mini S&P, and it was basically a scratch. I ended up making $75. So I put a trade on and came back on me, stopped me, and that was the end of that. All right, there I am putting the order in. And there's the confirmation that the orders were received. So now I'm long. You can see at the bottom of the pop out, it shows that I'm down initially what looks like $20, and now I'm up $20 right now. So now down 75. So this is the part of trading where it feels scary. If you've never traded with live funds and you just feel like you got to watch that number of how much money you're making and losing, that's the worst thing to do. Okay. What I'm watching is the chart. Does the chart continuously keep giving me feedback visually that it's accumulating and not going lower? Now, it can go one more time back into that lower fair value gap. That's permissible to me. I'm willing to endure that. I just don't want to see it overlap that entire thing and go lower, because then I'd have to close the trade and preferably save my stop. Notice the bodies of the candles are staying relatively inside that fair value gap, that shaded green. Now, I'm only adding this to the chart because I knew I was going to record it and share it with you today. But I do not have this in my charts. Okay, the only annotations I have in my charts is when I'm teaching my students. And since you're here, at least for right now, I'm calling you my student. Even the haters. All right. So with the aid of hindsight, because I lived this moment this morning, it does go down one more time and stab into those wicks that are forming. Now, when you put a trade on, you kind of like give the complete control of everything to the marketplace. And you want to just allow the market to do what it's going to do and not try to overthink every fluctuation. Every little minor movement in the price action is not something that is going to hopefully sway you. So I've already had it in my mind that it could go back down and make a slightly lower low than those two little wicks that it's formed inside the lower fair value gap. So since I had that expectation that it could potentially do that, I'm desensitizing myself to that in the event that it forms. An ideal scenario would be it doesn't do it at all, obviously, but I'm allowing for that price action, especially with the volatility that we've been seeing the last few days. And what I'm thinking right now is they're taking it down one more time to accumulate more longs. Notice I'm saying that, not it's selling pressure driving price down. I think this is where I took the most heat on the trade, if I'm not mistaken. It was like $455 of trade drawdown while being still in the trade, which is below the threshold I've already said. My maximum risk on a trade, if I'm trading competitively, is 4.5% per trade. Generally, I like to take a trade that I feel comfortable with around 3.5%. That's a good trade for me. Okay, showing signs initially that it's wanting to go higher. And what I'm trying to do is keep my focus on that lower level, or the bottom of that pink rectangle. That's the low-hanging fruit. That's the easy target I'm telling you to try to practice and learn to reach for. The ideal scenario would be to go all the way to the top of that pink. But while you're learning, don't do that, okay? It's easier just to let it trade to the low end and just take it off when it gives it to you. I have my trigger on the flatten button, so it cancels every order, takes me completely out of the marketplace. As soon as it touches the low end of that rectangle, I'll collapse the trade. And right now I'm up almost $900, $895, $935, $925. And again, you can watch that fluctuation in the lower right-hand corner of the pop out. I'm at 1100 plus, 1149. Okay, traded there, touched it. Now I'm collapsing the trade there, just like that. And that's it. Now my account's booked and marked to market with $1,190 in gain. And the balance now reflects it with $27,915.11. So there's TradingView, showing the chart I'm watching, because I like TradingView's charts. I don't like TD Ameritrade's charts. I don't like them. So I'm just using the pop out, which is, why are you showing this thing scrunched up? I'm not hiding anything. You can see it. It's right there. So let's go over and take a look at the chart now. You can see nothing has changed. I just magnified that pop out, so it's entirely taking up my entire screen. We're going to go to the NASDAQ E-mini contract symbol. And I am so clumsy with this platform still. But I'm sure I'll get real good at it by the middle of the year. Hint, hint, nudge, nudge. All right, so we're going to look at this day. And there's the chart on 1 minute. And I'm going to add an overlay, okay? But I'm going to put in so you can see where the trades are in that chart. There's the executions, bada bing, bada boom. And there is these areas I showed you on the TradingView chart. So for the inquiring minds that wanted to see a live chart and live account and all that business and the logic of what I'm teaching in the YouTube channel, I humbly submit this. Until I talk to you on Thursday, be safe.